This podcast is for informational purposes only and is not an offer or solicitation of any offer to buy or sell securities. SNN.Network and Maj Soueidan are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome, everybody, to Avoiding the Crowd podcast with Maj Soueidan. I'm your producer for the show, Robert Kraft, on behalf of SNN.Network. Maj, great to see you, man, as always. How you doing?
I'm great, Bob. How you fell off my chair. Everything's great.
What did you just do with your chair?
My chair fucking. The chair was great until you said go. My chair fell. So
your chair fell?
Oh. It's about to fall, rock over. Yeah.
Dude, I think it's about time. This is a perfect example of a classic successful microcap investor. They're so about the game, they could care less what chair they're sitting in. You know, like you're not even like, I bet does it rock all the way back? I mean, what kind of chair are we working with? You know, maybe we should
now that I gained some weight during COVID, it rocks back. Yeah. So it's working out.
That's a COVID-19 chair.
Yeah.
Good stuff, man. How you doing though? How's your weekend? Everything's good?
Yeah, it was really good. Played some tennis, did some research. It was a good weekend. So
is that your ideal weekend? Just like a little bit of exercise and then mostly research?
It depends, man. I like to relax, and take it easy sometimes and not do always research. But yeah, I mean, typical weekend is, play my guitar, play some tennis, and then hang out with some friends at the local bar, distancing, watching a band outside, and then because there's one nice strip here called Los Olos in Fort Lauderdale. We have some nice restaurants and bars, and then I work actually there's a cafe there called Ant's Flower Shop, where it's my little office. They have an outside cafe, inside cafe, and coffee, and I usually set my office there, a little corner outside table.
That's a big shout out right now. I mean, I think as we get more and more exposure to the pod, I mean, we should approach them about being a sponsor. Thanks to Ann's, you're able to do all the research that you do.
And you might get
is it Ants or Ants? Ants?
Ants, A-N-S, Ant's
okay.
Flower Shop. Okay. Unfortunately, there's not a lot of MicroCap investors, so they might only get one or two people a week. Or, actually a year. Come on, shout out.
Well, look, I mean,
we won't tell them that, though.
This is true. Look, man, the main reason I asked this is because we got to show these youngins what's up. Look at you. You're spending your weekends doing even a little bit of research. You got to find that time to get it in, man.
Yeah, going through stages. Sometimes I'll do sometimes I'll make it a total research weekend. Sometimes I'll relax it, just to make it fun. I want to mix it up.
Yeah, no, I hear that. All right, well, let me prep everybody. This week's agenda. We got a really fun agenda this week. First things first, Maj is going to do a quick wrap up of of his weekly newsletter. Just some of the stuff that he put out there yesterday. We were recording this on Monday, so we put this out on Sunday, and then. This is something that we've wanted to do. This won't be the last one for sure. Maj is going to give his first stock pitch for the podcast. So that's going to be a lot of fun. That's coming up very shortly after we do a quick recap. So that's the agenda. Hope y'all enjoy. Maj, you want to take it away and get started on what you talked about this past week?
Yeah. So thanks, Bob. I think, it's last week we had talked about the buy, sell, hold dilemma, I think a little bit during our podcast. And and that's why I had talked about in the last 2 weeks ago, Sunday's weekly recap that we do every week for our Geo Investing premium members. And I said a video will be coming talking more about it. So this week, there's really not much to talk about that's different because I basically introduced the video, made about maybe a 40-minute video on the subject, going deeper into the buy, sell, hold conundrum, challenges, how to get through it and how to make decisions as stocks are going up. How do you know if you want to buy more, sell some, or just keep it? and I went through different kind of emotional challenges that we face when that's happening. And so we can talk about that maybe another time after I digest the video myself a little more. So so that's that. But I think that we'll have more on that later at a different time. And so I guess really what I want to do here was actually talk about a stock pitch kind of theme here. I think your conference was it 2 weeks ago or 3 weeks ago now? Your conference, the last one you just did.
It was August 3rd through the 6th to 24th. So I guess what was it 3 weeks ago? Sorry, time. I have no concept of time anymore. It's just it was prior and now it's today. So it was I guess a couple weeks ago.
So during that, I guess I was awesome. I was really thankful you invited me to do a panel on that. I host a panel. I think it was called Management Comeback Stories, and talking about a couple stocks, interviewing a couple CEOs. I think Energy Focus, and with James Tu, and then In Touch Systems out of Canada, Cameron Watt.
Right, In Touch Insight. Yep. In
Touch Insight. Yeah, and again, I guess we should say now, I own both those stocks, and they're relatively.
I do not.
Newer positions. I may add, sell, or do nothing to my positions moving forward. Yeah. So the theme of that panel was to really talk about management teams that have kind of helped turn around a company, and specifically, I invited those two companies because they had CEOs that had experience in the past in meeting challenges, facing them successfully, and having some success. And with what's particular was interesting about that one was Energy Focus, because Energy Focus is an interesting story in that James Tu, the CEO, used to be with the company a few years ago. I believe it was in 2014, when the company had a really good run. And the stock, it might have been even 16. The stock he was there for maybe a year or two. The stock did really well. I think it went up maybe 4 or 5 times in a relatively short period of time. And they're an LED lighting product. They go on do retrofit type of work for commercial customers and the Navy. And so during that time he was there, the stock did really well. He helped turn around the company that was struggling. Actually, and while he was there, his job at that time was to really solidify, and continue to develop a relationship with the Navy. So it worked. But then there was a disagreement with the board on how to grow the company. He eventually left. The stock fell apart, and they recently asked him to come back and revive the company in March of 2019. And he's doing it. I think he's doing a great job. So what I like about that, in both times he took, and the first time he actually bought some stock in the company through a preferred financing. Did it again this time. So it's basically a replay of what's going on. The Navy relationship is still very, very intact, but now he's actually trying to rebuild the company in terms of its non-Navy, its commercial business outside the Navy, and product innovation. So basically, it shows that I have some confidence in the turnaround because Tu was there before and got it right. He's on a great passion for the business. He understands the industry and the company and the direction it has to go. And he's doing it again in a different way. So I'd like to look for companies that have that type of theme, where you have a CEO that used to be there with a company, did well, for some reason left the company, whether it was on good or bad terms, and then comes back later to fix the company. And that's what we have with with the stock I want to talk about today was symbol is IEC, because I own the company. It's called IEC Electronics Corp. IEC is a symbol, and it's electronic manufacturing services company. So let me share my screen and pull that. I have a presentation. A little slide presentation. I'm not going to do the whole thing. I'll jump around a little bit, and I'll try and get through this really fast. Maybe 10 minutes. I think is all I really need to kind of get through it and get my major points across here.
And for those who are listening, be sure to check out this on the SNN.Network YouTube channel so you can see the presentation on there. Otherwise, Maj will be verbally, for those listening, you'll be verbally hearing the presentation now.
Yeah, it's probably important to watch the presentation but I'll be conscious of that too. So let me share my screen. I think I want to go screen 2. Share it up. So so here's the 2 stocks. This is actually a screenshot of our Geo Investing premium portal where we have model portfolios. And this is EFOI and this is IEC. They're on the same portfolio. We have a high conviction portfolio, we call it, which are stocks we have really favorable opinions for, not maybe the short term, but definitely a long term, and that we think might be multi-baggers. So give you an idea there. I didn't want to show all of them because I don't want to go into every stock that I may own or for disclosure purposes at this point in time in this podcast. But if we go to the pitch here, so here's my disclaimer. You should definitely read the disclaimer. I mean, Bob, you have a disclaimer anyway in your podcast, so it's there if you want to. So here's the thesis, basically first-class CEO selling a best-in-class service offering to sticky customers. That's kind of the overall theme of the story here. And so what is EMS? So EMS is basically taking components, electronic components, putting them together, and they're testing them, designing them, assembling them. Those can all be done separately. Different companies can do one piece of it, or you can look for one source type of companies that do it all. So IEC does a lot of it. They design, assemble, produce, test. They have a one-stop solution for its customers, which I love. It gives you pricing control, quality control, and especially these days with what's going on in terms of the tensions we have, sourcing supply, these kind of things, the overseas tension with China. So that's basically what they do in a very quick snapshot. And when you look at what IEC has done with the CEO Jeffrey, is that they've taken out cyclicality from the business by concentrating on higher end businesses, less cyclical businesses than the peers are, and creating that one source solution for its customers. I believe it has multi-bagger potential for longer term investors, but there will be some volatility in the business. It's inherent in the EMS industry where you have the visibility isn't great in general, although they've tried to take and rectify that a little bit. So I'm looking at this as more as a longer term play, not a quarter to quarter type of play, which is how we look at a lot of our high conviction plays on that phase talked about earlier. I'm like, here's some quick stats. I'm not really going to get into the valuation there. It's trading at PE 12 and a half. This industry will have generally a lower type of PE, but I think over time it's going to be, as its business model plays out, it will get an aggressive valuation at some point. But when I'm looking at a longer term play, I'm looking at more, hey, can this company be a lot bigger 5-10 years from now? And I think the answer is yes. But here's that slide if you want to look at it. It's slide 4 during this presentation. And what I'll do too, Bob, I'll have a PDF download that people can, maybe people can download.
Well, Maj, real quick. I mean, is this all the up to date stats, or what day is?
Yeah. I updated it today before the.
Oh, you did? Oh, okay, good.
Yeah, the current ratio might be a little off. I didn't do that, but I'm sure it's around the same. And if you look at this, you might, oh my God, zero debt. Zero cash. Well, the company is pretty good at turning its inventory over, and historically has operated with zero cash. It's the one thing I really want to get back to management and talk to them about. I've interviewed them a couple times, but really never touched upon that, and I want to just get more color on that. But when you look at the history of the company over the last 10 years, it's how they've operated, and it might throw some people off. They do have some debt, but again, historically, they operate that way. I'd like them to have more insider ownership, which kind of pisses me off a little bit, and why I don't necessarily have more skin in the game here. Something I want to address a little bit. But it's a real company, real revenues. They're at the higher end margin of the industry in terms of gross margins and EBITDA margins. So, and we talked about why I like the comeback stories, and that's what we have with IEC. So let's get back into who Jeffrey Schlarbaum is here. Hope I pronounced that right, Bobby. But and so he was. Let me see if I go here. I guess he was the president of IEC between 2004 and 2013. He was instrumental in pivoting the company away from targeting cyclical consumer segments of the industry, lower margin markets, went from lower margin to higher margin markets, stickier markets. It has IEC experienced several years of consistent growth. Sales rose from 19 million to 145 million. I'm just reading off the slide deck here, so just in case you don't have that in front of you. The company was profitable between 2006 and 13. The stock went from about $1 to a peak of around $8 in 2011. This is all under Jeffrey. He eventually resigned in February 2013. There was, I think, a CEO succession dispute. So in the direction where he wanted the company to go. So I think he was promised a CEO position at some point. And when it came to do that, there was some disagreement there, and that never happened. So he decided to leave the company. During that time, the company made some missteps. They basically undid a lot of what Jeffrey had done, including some failed acquisitions, lots of key customer segment focus. They were too diversified in the customers' segments they were focusing on, which means they were in maybe too many lower margin areas, cyclical areas. They quickly started losing money. They lost money in 2014 and 15. Shares declined from around $6 to a low of $3 to a low of $3. So in 2013. 2015, Jeffrey comes back. He's appointed as CEO, basically doing the same strategy before. I guess picking up from where you left off at. Sales have grown up. I've grown from 127 million to I think over a $200 million run rate now. Moving forward, they've been profitable since 2016, and really they inflected in 2017, where you see some nice consistent revenue and earnings growth. I'm checking in. This is a cool. I went to pick up a pretty cool slide from their presentation. I like to look at key slides. I'm looking at slide presentation of a company. And there might be 10, 15 slides, but I'm looking for like the 1 or 2 or 3 key slides that really spell out what's going on at the company and get me really excited. And here's a slide I like a lot. It shows how the backlog obviously has grown, and how the new customer backlog has really has grown too. So they're not only growing their backlog, but they're getting it from new customers, which is nice. And the stock has, I think, gone from 450 to when he joined to, I think it's about 9. It's hit his high 930. It's around $8 right now. So I have a slide here, which you can see in slide 10, which gives the history of his history of Jeffrey's kind of involvement with the company. So I think it's key to understand how is IEC different in this industry that's kind of crowded maybe. And as I said earlier, it's a little one-stop shop for its customers. And actually has a U.S. manufacturing facilities. So that's really important now with everything going on with China. There's a lot more protectionism going on. So that's really accelerated the benefit to what they do here and the demand for their product, because they do it in the U.S. And we know what's going to be going on, in terms of customers, potential customers in the technology industries, wanting to have a go-to source of supply and make sure they're going to get their products on time. So I think that's going to give them a pricing edge and a competitive edge moving forward. And because they basically target certain critical kind of mission type of industries, higher quality industries, and that the customers are going to place a higher value on that too. And it allows IEC to react quickly to changes in the market and customer needs and demands. So here's basically the breakout of what the industries I look at are medical, infusion delivery, which I love, robotics, which I love. I think we can all say they're very consistent, high growth markets that are going to be around and not that cyclical. Aerospace defense, another sticky area to be involved in. They have an industrial segment, which is semiconductors. There's some definite cyclicality there. But asset tracking, transportation, they're high growth kind of in I think stickier type of areas of the industry also. Again, one more time, manufacturing in-house gives pricing flexibility, easier to provide at one stop, provides trust, and it can help respond quickly to supply chain issues, maybe quicker than its competitors can. And we're having a lot of supply chain issues the last 3 years in the technology sector. So if we look at the caveats here, I got 2 slides of caveats here, which I always like to see, and I don't like to get too caught up in them but I like to understand what these caveats are, right? So, when I'm looking at a company, and as I said earlier, every stock doesn't have hair in it, right? Or there wouldn't be an opportunity. There's going to be some investors that don't like the caveats, which provides opportunity for investors that have done their deep due diligence in the company to know that maybe they might not be as bad as assumed. But again, I want to get into understand why only we have a 4% insider ownership. It seems odd to me. Although their 12% gross margins are above the industry average, and there's a high end potential of 18, it's still below the gross margins we look to normally invest in at Geno Investing. And as well the EBITDA margins, but it's just typical in industry, and it's something we can't avoid. There'll be some visibility issues, that aren't just inherent with the industry, which is why you got to take a longer term view on this kind of company. And that could affect investors' willingness to assign premium valuations to the company until they really prove that they can operate successfully through multiple cycles. We talked about supply constraints. Even though they do control a lot of their stuff here in the U.S., they still will have supply constraints due to strong demand, potentially, outstripping supply, or we have issues with China and foreign partners creating chaos in the industry. They don't outsource manufacturing. I think they're in the midst of, or I don't know if they've completed expanding their manufacturing capability, which is really nice. Their manufacturing capacity. Again, I want to understand this cash balance zero situation a little more. And they have a little, maybe higher debt to equity than I like. I think they're at 0.7 right now, and I'd like to see that under 20-30% usually. That's it, Bobby. If that wasn't too long, too boring.
Not at all. Not at all. I don't think. I think anytime you have a chance to share your thoughts and insights is always of value. I think that's why we're doing this whole podcast. Come on now, Maj.
Well, thanks for the opportunity.
Well, hey, yeah.
And again, I'll make this slide presentation available in the next few days or whatever. And I may have recorded the pitch. I got to go see. I can't remember.
Well, shoot me the link, because what I'll do is I'll put a link to it in the description for both on YouTube, and then for everybody we're still recording. So anybody who's listening, you're going to get a link to this in the description, both in the YouTube description and also on Podbean. So look, this is some of what you can expect on a weekly basis, both going over his weekly wrap up, having a guest on to talk about stocks, both individual ideas or just philosophy in general, to a stock pitch, and that's the kind of value that Maj brings to the table for this show.
I'd love to get Jeffrey on the program if we could, as a CEO, to talk to us.
That'd be cool too. Yeah, that'd be really cool too. Talk to you, not me. I'm just the producer. I'm back. Pretend like I'm behind the mountains that you see in this picture here. Okay, for those who are listening, I have the LA skyline. Yes, this is the LA skyline, and yes, we do get snow-capped mountains when there is a heavy downpour. Because little does anybody know, people from California know, is that the mountains are only 2-3 hours away. So that's why we got snow-capped mountains. It's nice, right? Yeah. People thought it was Denver the last time I did this. And no, it's the Los Angeles. Yeah, man. All right. Well, real quick, SNN and myself, we are not shareholders in IEC. Just want to make sure that's clear. And yeah, you can follow. I don't know, Maj. Is anything else you want to say about this week? I mean, it's relatively short episode. You know, we got your stock pick. We got kind of the wrap up. I mean, anything that people should look out for this week, or maybe can look forward to next week. I know we haven't even really talked about next week's episode, so you can surprise me right now with what we're going to be talking about next week.
I usually figure it out on Saturday or Sunday and then call you.
This is true.
So, and if whatever we decide to do today, it'd probably change by Sunday.
This is true.
But I'm definitely like now going through a lot of stocks that I've had, microcap companies that have had their earnings, trying to see if there's any stocks that maybe have gone down or haven't gone up much in reaction to good earnings or misinterpreted earnings reports. So that's what we're doing this week here at Geo. And again, to follow Geo, you can come to geoinvesting.com. We have a 7-day free trial. You can always try that out. We have now a monthly option also that we just recently put in as a membership option. And you can reach me directly by email at maj@geoinvesting.com. You can call me at 267-246-3263 directly. You can follow me at Twitter, at Maj Geo-Investing.
Did you just butcher your number? I mean, are you serious?
Or at Geo-Investing for the company Twitter handle. I should have got. No, it's fine. It don't matter. I can put that out there. Like, let's say I get $1 million. No one's gonna call.
It's too damn funny. Well,
I'm begging you to call me.
Well, look. So give the man a call. He's, look. It's. Sometimes we're still in quarantine. You heard he sometimes goes out on weekends. All right. So give the man some love. Let's go. My name is Robert Kraft. You can follow me on Twitter at Bobby K Kraft. That's BOBBYKKRAFT. You can follow the podcast on our YouTube channel, the SNN.Network YouTube channel. That's youtube.com/SNNWire. You can also check it out on Podbean at avoidingthecrowd.podbean.com. And big news, it's now available on Spotify. So you can now listen to Avoiding the Crowd on Spotify as well. Just go in the search box and look up Avoiding the Crowd with Maj Soueidan, and you'll see Maj's beautiful face with nice beard and the whole deal. Yeah, right. So, with the logo, I'm telling you, it's going to be that. But all right, well, with that, Maj, by the way, I think that's what you just talked about that you guys are doing this week for Geo Investing. I think that's a great topic for next week. That sounds super interesting.
Yeah, we'll see. We'll see what comes up.
Oh, we'll see. All right. Well, we'll see what the people say. All right. Well,
I actually do have one we could talk about. Actually, I'm thinking about right now, but I can dig a little deeper into it.
Should we talk about that offline, or do you want to say it right now?
I mean, I guess I'm not going to start talking about the symbol yet because it's rather illiquid. I'm still digging into it. But the situation where a company wasn't able to grow its revenue for the last couple of years because of the delay in winning a government contract. They have won that contract, but it was only really talked about in a filing. We dug it up, talked about it to our premium members. Then they issued a press release. Stock went up a little bit since then, but it's still being underappreciated. And basically, they have 7 years now of predictable revenue and net income coming. And the stock is, in my opinion, selling really, really cheap. It was priced for bankruptcy, not so much anymore. But so we're digging in that a little bit right now. We do have a write-up on it already at geoinvesting.com, on the premium side. We have done a good amount of due diligence on it, and I'm going to continue doing it this week. I'm trying to get an interview with the CEO to basically dot some I's and cross some T's. Got it.
All right, that could be an interesting topic for next episode. We'll see. We'll see where your wind blows, I guess, by Saturday or Sunday if you still want to do it.
All right, man.
All right, dude. Thanks again. That was a lot of fun. Talk to you soon.
Yeah. Bye.
This podcast is for informational purposes only and is not an offer or solicitation of any offer to buy or sell securities. SNN.Network and Maj Soueidan are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast.